Good afternoon, good evening, good morning, wherever you are in the world. Welcome to our DAO1 daily call. My name is Bruce Hughes. I'm part of the advisory team to the DAO1 Foundation. And my role today is to look at the DAO1 products and their positioning within our current market conditions. If you're dialing into this live, please go down to the Q&A box. Let me know which town, country, city you're dialing in from. And if you're watching this as a recording, I want to welcome you to the call. It is the 16th of February, 2026 today. I hope to only take up 15 to 20 minutes of your time to give you facts and figures in order to help you make a decision as to whether or not the products, the services, and the strategy you see today fits in with maybe some of the goals and strategies and roadmaps you've put in front of yourself for 2026. I can see that we have Brigitte from the Netherlands on the call, Hanu from Finland, Pierre from Sweden. We've got South Africa, Australia, more Finland, Zimbabwe, South Australia on the call, India. Welcome to the call. Great to see this global community. We will be covering some global stats, global facts, and global strategies so that no matter where you're based in the world, what you see today, you can immediately start applying. And so I'm going to share my screen with you, and we're going to start off with probably one of the most brutal questions that we can start looking at as mothers and fathers, as income providers, as people who are out in the workplace in economic conditions, trying to make ends meet, trying to make money go as far as we need it to go, trying to make the work that we do make sense. And so one of the questions that I asked ChatGPT earlier today is, what is the average person take home after taxes? And I specifically asked about the European Union, which is broad. I've asked about the UK, Australia, the USA, South Africa, and then I chose one specific marketplace in Asia, Singapore, because it's quite stable. I wanted to try and look at some stable examples. And listen, if you're seeing these numbers and maybe you've gone and done the data for yourself, share in the Q&A box, but it's quite an interesting exercise. If we go look at the European Union, on average, those people who are sitting in Sweden or Finland or Germany, France, those are kind of different extremes, Italy, etc., your take home after taxes is about 25 to 30% less. In other words, for every 100 euros that you've earned, you're taking home between 70 and 75 euros. In the United Kingdom, for every 100 pounds that you earn, you're taking home between 75 and 80 pounds after tax. If you're sitting in Australia, and I think this is fairly true for New Zealand as well, there are some similarities. For every 100 Aussie dollars you're earning, you're taking home between 72 and 75 after tax. You might be a bit lower for certain thresholds or maybe a bit higher. United States, every $100 you earn, you're taking home between 75 and 80. South Africa, for every 100 Rand that you earn, you're taking home between 75 and 80 Rand. And Singapore, top of the charts here, for every 100 Singaporean dollars you earn, you're taking home between 85 and 90. And that doesn't sound too bad if we're starting to get raises and bonuses that kind of make up that shortfall, or if those taxes are being put to work by the governments that you're paying them to. In other words, you're getting value for money for the tax that you're paying out. Now, this is a live call, so I'm going to ask for some interaction. In the Q&A button, let me know if you feel you're getting that value for money, that those taxes are going out and your roads are better, your schools are better, your health is better, politicians are making good decisions for you. You feel like that money is being used well. Now, there is going to be mixed reviews, I understand. In some places, that tax is being put to work exceptionally well. In other places, we're paying tax, but not necessarily getting services for it. And this is a pain point. This is a major pain point for a lot of people who feel like they're not getting those services. And there is definitely a disillusionment with governments, politicians, and some policies over the last 5 years. Now, the second question I asked is, what is the cumulative inflation rate over the past 5 years in those same countries? Because it's not just tax that we're dealing with as income earners. There's also this thing called inflation. In other words, when a government decides to print more money, when they do that, that's called fiscal easing. It's a way that the governments try and bring value into the economy. Just a quick in the Q&A, if you and I printed money with a printing press and put it into the economy, would we go to jail or would we be celebrated? I believe last time I checked, if you and I started printing money, we'd go to jail. Apparently governments are allowed to, different rules, I guess. But here's what's interesting. Over the last 5 years, so post-COVID, if we start looking at inflation in these different territories, it starts telling quite a damning story. In the EU, on average, 25% inflation. United Kingdom, 24% inflation. Australia, 21%. United States, 23%. South Africa, 28%. And again, Singapore, top of the charts, 9%, doing really well in easing back and not hitting its people too hard with inflation. In really simple terms, what that means is that your $100 that you're taking to the grocery store today is worth less. It's worth less by 24%, 21%, 23%, 28%, and 9%. And whilst those two things can be looked at separately, when you start putting those two numbers together, in other words, as an income earner, as a father, as a husband, as a provider, when I'm coming home with my $100 earned and I'm taking into account taxes being paid and I'm taking into account inflation, it starts to really make a lot of sense as to why there's a fairly large amount of frustration, financial frustration, or time frustration sitting out in the marketplace. And maybe just out of 10 in the Q&A, let me know. 10 being, yeah, I can feel that frustration. It's a very real pressure for me. 1 being, hey, this doesn't bother me. We're actually fine. Financially, we've made good decisions. Time-wise, we've got lots of time in our hands. This isn't an issue. But any number between in the Q&A, let me know where you're sitting at with this cumulative combination of both taxes and inflations starting to eat away at what we earn. And so I asked ChatGPT just to kind of put it into a really simple summary for me. If I had $100 5 years ago, so, just as COVID was hitting, and today, it's the equivalent of me walking into the shops today and I've only got $58 worth of buying power if I live in the EU. In other words, $42 disappeared somewhere. In the UK, I have 63 pounds worth of buying power. That means 37 pounds walked out the door in the last 5 years. In Australia, I have $61 worth. $39 went on walkabouts. In the USA, I've got $63 worth. That's $37 not there. In South Africa, I've got 61 rands worth. That means, again, 39 rand is somewhere. It's in a pothole or washed out into the ocean somewhere. Singapore, again, doing well. 81 Singaporean dollars. I've lost $19 somewhere in the last 5 years. Now, let me tell you the two places that we're seeing the pressure of this play out. We're seeing it play out either in people having to try and figure out how to increase their income to make up for that deficit, or we're seeing people feeling the deficit in their time. In other words, they're having to work more, take on 2, 3 jobs. If we go look at the stats, most households, in other words, mum, dad combinations, are working 2.5 jobs. That's more jobs than people in a home. In the Q&A box, if you're a single mum or a single parent, how many jobs are you working? I've got some very good friends, single mum friends. My wife's connected with them. Their children on the same age as our sons. They're working 2 jobs. They're working their office job and then they've got a side job. Because in the last 5 years, 29, 39, 40% of income has walked out the door. If you're watching this as a replay, does this sound familiar to you? Now, the good news is today we're going to look at 2 things. 1, how do we put that money to work for us? In other words, how do we put it into a place where it can stretch against inflation and taxes? Two, we're also going to look at, is there a business model? Is there a way that we can increase our incomes with the time that we have? So we're going to do that on today's call. Now, before we do that, think about the territory you're in, and I want you to write it down, or in this call in the Q&A, write down what your deficit is over the last 5 years. So for every £100 or €100 or $100, what is your deficit? Maybe based on the stats we shared, or maybe you know them. Is it 21%? Is it 31%? Is it 41%? What is it? Let me know in the Q&A. That's question one. For you watching this as a replay, write it down. What is that deficit? What does that equate to in dollars, pounds, euros, etc.? Then question two, write down if in the last 5 years you've received an increase in income or an increase in bonus or a raise that has offset that. So just write down, yes, I have, and what that amount is. In the Q&A, put it down. Yes, I have. This has been the amount. And then the third question is, has it met the deficit? In other words, are you in a place where you're at least breaking even? You're at least breaking even. I know for a fact, as a father of 3 sons, okay, 3 boys who are now going into teenagehood, 5 years ago to today, our expenses are actually higher than they were 5 years ago. Our food bills are definitely more. Our clothing bills are more. The sports activities that we're doing are more. And so I know for a fact, even if we had tried everything in our power to keep our expenses exactly the same, one, based on inflation and tax, we're still not in a healthy place. And two, our expenses have actually gone up. They've gone up because our family has grown. Our family has grown in actual mass and size and needs. And so what I'm going to show you today on this call is I'm going to show you, one, the product that we're using to make our money stay ahead of the deficit. And then two, I'm going to show you the business model that allows us to put an extra hour or 2 of our day into producing more and more income. Because those are the 2 ways that we overcome this. One, do we have a vehicle where our money can go ahead of inflation and taxes? In other words, we're looking for a way for our money to do 31 or 41% more a year. Does that make sense? Just type yes if this is making sense. We're trying to find a way. If we had $100 and 5 years later, we're actually only going home with 61, we're trying to find a way every year to at least make up for the difference. This is the minimum bare requirement. In a perfect world, we're trying to find a way to actually go above that. Now, question to you before we look at the product and we look at the business model strategy is, are there vehicles out in the marketplace that do this currently? In other words, can you get this in housing at the moment? Is there a housing market? Let me know in the Q&A box that's doing 39%. I live in Dubai at the moment. On average, it goes anything between 10 and 18%. That's the housing market in Dubai. Banks at the moment, certainly not here in Dubai, but I know back in South Africa, where I'm from originally, offering between 3 and 4% per year. If you look at aggressive investment platforms or PAM account managed platforms, they target anything between 12 and 20%, which is incredible. But let me know if you've found something that is making up the deficit at the moment. Because what we're going to look at now is a way to start targeting this. And the best way for me to target this is I like to break it down. You know, if I want to try and target this over 5 years or 1 year or monthly, I want to break those stats down. And so if I'm targeting this per year, I'm trying to divide that number by 12, right? 40 divided by 12, trying to get that down to a more palatable number. How do I, every single month, try and increase my earnings or get my money to work for me by that percentage? In the bottom, in the chat function Q&A, let me know what your percentage is, because we're going to look at a product, and for some of you, we're going to look at an income producing opportunity where you can go, how do I make up this difference? How do I get this number to work for me? In other words, how do I target at least 3 to 4% a month increase? Because over a year, that's going to help. Okay, so let's go look at a product first that does that. We're going to head across and look at a product that is positioned in one particular market. Now, whether you understand the market, like the market, hate the market, doesn't change the fact that this market exists. And this market is called the cryptocurrency market. There are 5 major markets that exist in the world at the moment. There's the property market. That has value based on the fact that property is limited. If you want to increase the amount of property, you've got to go build islands in the middle of the ocean. So that's one marketplace. It's a limited or scarcity-based marketplace. There's the metals marketplace. In the Q&A box, let me know if you've been tracking with gold at the moment. Gold and silver are having a fantastic 2026 because it's a scarcity-based marketplace. So that's the second market that people often look at, the metals market. Then you've got the forex market. This is where pounds and dollars, euros and rands and yen and all the rest of it meet each other and get exchanged. That marketplace is high volatility, but it's an inflation-based market. So even if you're trading in that market, what you're ending up with is something that is devaluing in money. We've just looked at that. That is the third, 1, 2, 3 market. The next marketplace that most people have heard about is stocks and shares. Again, this is the value of a company. Tricky thing with a stocks and shares market is there's not a lot of transparency. It's why it's highly regulated. It's why you've got to bring in the big 5 auditors like KPMG to see if the books actually are honest, etc. The fastest growing and most transparent market at the moment is our 5th market, and that is the cryptocurrency market. Whether you know it, whether you hate it, whether you love it, whether you understand it, doesn't change the data that, one, it's the most transparent, meaning it's on blockchain, we can see value, there's no need for auditors, regulators, etc., because you can actually see if something has value or has gone to zero, and you can understand the value behind it. The second, it's the fastest growing because it is starting to replace 2 major technologies. One is banking infrastructure technology, and 2 is the internet, Web 2. So we're going to look at a product today that is focused on trading that market. We're going to look at something called an AI trading bot. Now you might be asking, why should we look at an AI trading bot? 2 simple reasons. One, AI is driven by analyzing large amounts of data and then making data-based decisions. Do you know anyone who's ever traded? Let me know in the Q&A, yes or no. Maybe you've traded, yes or no. Here's what I know for a fact. People are emotion-based. You might have that friend who say, oh, they're highly analytical. You might have the chartered accountant friend. He's a real bean counter. You might have the friend who loves numbers. She's a real, numbers cruncher. And that might be the most analytical person you know. Reality is they're still emotion-driven. And so when it comes to trading markets, you want to have something that is trading based on data, not emotion. Most markets are emotion-driven. Most traders are emotion-driven. When we see headlines, people get fearful, they dump certain markets. We see other headlines, people get excited, they buy on hype. This is the nature of humans. I love them. I'm a human. But if I'm going to trade a market, I want something that is not human doing it. The second thing is we're focused on a trading bot in the crypto market because everything it does is on chain. In other words, it's transparent. We can go and have a look. Buy, sell, buy, sell, buy, sell. No middleman, no third parties, no exchanges that are trying to fudge the books or fudge the numbers. And what we're looking at doing with this particular product is we want to see if it can, again, what is our focus? We're just looking to find anything that can do 3 to 4% a month on average. On average. If it does more than that in some months and less than that in some months, that's fine. We're looking for the minimum target of 3 to 4 months. Just yes, that makes sense, or no, I've started watching this call halfway through. I need to rewind and watch the replay. Let's go have a look at these trading bots. Let's go have a look at how they work. So there's 10 different price points. You're actually buying a physical smart contract AI. You're buying an actual product that is going to go execute trades on your behalf 24/7. And that comes as a cost. This is your only cost in the whole process, buying something that belongs to you and execute trades. They start from as little as 200 USDT and go all the way to the other extreme, past 1,000, 2,000, 3,000, up to $70,000 worth for a bot. Once you've purchased a bot, you then load what's called your trading load. In other words, the volume, the amount that is now going to be going in and out of trades. Now, here's how the bot is coded, so we understand the coding. The bot is designed to trade 24/7. So there's no closing when the markets close on Fridays like banks and forex and indices. The crypto market doesn't sleep, operates on something called blockchain. So 24/7. And secondly, it has certain minimum thresholds that it has to execute on. One minimum threshold is a 360% target. Now, we don't know how quickly it'll hit that target. We don't know if in a bull market, that's a market that's growing radically, it'll hit that target quickly. In a bear market, when markets are dropping, it'll hit that target slowly. We don't know if it'll do it in 1 year, 2 years, 3 years, or 2 days. What we do know is the bot's going to go in and out of trades, depending on market conditions, with this as the bare minimum target. Now, you have full control of this, meaning you can withdraw from it at any time. And again, your load, your trade load belongs to you. So you get that at the end of that time period. I'm going to show you 2 bots that I've had trading since the 23rd of November, 2025. So today's the 16th of February. That means we've almost been trading for 3 months. Let's go and have a look at these trade bots. So I'm going to choose $1,000 trade bot so I can show you. So this was loaded on the 23rd of November. It's done $165 on the 1,000. That adds up to 16+%. 16% in almost 3 months. Now, how can we track what it's opening and closing? We've got the full history down here. This is only trading between a coin called a Pertum and a token called USDT. So those are the 2 things it's trading. Imagine if you were on the forex market, it's trading, dollars for pounds. If you were in the metals market, it's trading gold for silver, etc. Okay, it is focused on only trading these 2 coin token over and over again, looking for buying and selling opportunities. And you can look at the entire history of that. The options, well, you can claim it directly as profits into your own wallet. You can also compound. The option of compounding and claiming profits are there. That's totally up to you. I'm going to show you a higher value bot. This is let me try to find it. It's a $20,000 bot, if I remember correctly. Yes, so we loaded this bot, $20,000 worth of trade load on the 23rd of November. So almost 3 months later, it's done just over 17%. That's $3,320 in the last almost 3 months. I can head across to an even larger value one. This is the Helix. We loaded this with $70,000 worth. It's done $11,738, so 17.17%. If you go look at the claim history, my business partner and I, we've been aggressively compounding this. You will start seeing us now alternating. We're going to do a compound, then we're going to do a claim, then we're going to do a compound, then we're going to do a claim, compound, claim, and we're going to start alternating between claiming our profits and compounding value into it. Now, in the Q&A, based on those figures, are we sitting above our minimum target threshold? The minimum target threshold to stay above inflation and stay above tax is 39% over 12. For some of you, it might be higher or lower. At 17% in almost 3 months. So let's give it another week. I'm going to do a recording next week and look at the final figures. We are currently averaging on top of that. That means we are winning. We're beating this. We're making this number work in our favor. so that at the end of a year, instead of us paying $100 with buying power 61, if we continue on this trajectory, in a perfect world, we'll be $100 plus. That's the goal, right? As a dad who's got expenses, the goal is to be $100 plus, because I'm trying to obviously make up for the deficit of tax. I'm making up for the deficit of inflation. Yes or no in the comment section. Is this making sense so far? We're living in an exceptionally exciting age where AI can do heavy lifting, where blockchain gives transparency, where markets like cryptocurrency are growing and they are becoming more and more mainstream. How do we take advantage of that? We plug into products and platforms that allow us to automate as much of this roadmap or the strategy as possible. Now, tomorrow, I'm going to do a teaching specifically on how to take the product we looked at today and turn it into a business model. But I want to touch on it for 2 minutes now before we go into the big teaching. So again, I'm going to head across to ChatGPT, and I want to share with you one of the fastest ways to make money at the moment out in the market is through affiliate and referral-based markets. If you go look at anyone who owns an Instagram page, a TikTok page, a YouTube page, these people, these professionals, these content creators are earning revenue just by sharing. They're teaching, explaining, and sharing. And the good news is most products and companies out there are now adopting referral marketing as their core activity for market expansion. We've seen double-digit growth in referral and affiliate marketing year on year. Double-digit, we're talking 17%, 16%, 15% year on year in the space, because it is becoming the preferred way for companies, products, and services to market. We saw Amazon, the largest e-commerce platform in the world, open up with their affiliate program. And so what I'm going to do tomorrow is I'm going to show you how you can take the product we looked at today, which in all fairness can stand on its own 2 feet. Every person on the planet could do with something that keeps them ahead of that inflation and tax curve. But we're going to look at a way how you can use your circle of influence. In other words, if this is you and you are connected to people, you know people, they could be in your friendship circle, your business circle, etc. We call this a circle of influence. There you go. How you can refer them onto this product. How you can say to people, hey, I bought this product, I've got this strategy that's executing trades 24/7 automatically so that I can stay ahead of inflation, ahead of the tax gap. This is the product I'm doing it with. Do you want to have a look at it? That's called a referral-based system or an affiliate system. That's your first circle of influence. We're going to tomorrow look at how we can use not just our own circle of influence, but how we can build businesses with these people that we talk to. We can also earn micro commissions on their circle of influence as well. I don't know what the saying is or who the person is who said this, but it was that every person on the planet is only 7 degrees of separation between them, right? In other words, 7 circles of influence separates us from every other person on the planet. Imagine if we had a business model, a referral system that we could plug into, help people plug into this product, and we can grow market awareness, we can capture market share, and we can earn commissions by doing that. Tomorrow, I'm going to go through a business plan on how to build a $30,000 a month business in just 90 days. And I'm going to show you how we're going to do that using the product that you looked at today. So make sure that you join me 10 a.m. on the 17th of February, 10 a.m. CET on the 17th of February. If you're watching this as a recording or a replay, grab hold of tomorrow's replay so you can take not just the product, but also, if you're interested, a business model, and you can put 1 to 2 hours a day into not just staying ahead of the trend with the product, But imagine now also staying ahead of the trend. In other words, taking this number and increasing it by another 30% or 20% or 10% just by becoming a referrer as well. Thank you so much for your time. I hope you got value out of this, and I'll see you all again soon on the next call.